Hello, ladies and gentlemen. An incredibly warm welcome today to the webinar that we've got, which is focusing on an area which I know is absolutely pertinent to anyone that's looking at electronic invoicing and looking to do that over the next 12 to 24 months, or indeed has already begun an e-invoicing project. So today's sharedserviceslink.com webinar, I'm delighted to say, is being sponsored by Ariba and is looking at how to ensure auditors and tax authorities trust 100% of your electronic invoices. So I extend to you a very warm welcome indeed. I am your host for today. My name is Susie West, and I had been in the finance and accounting shared services market for about 10 years. Before setting up sharedserviceslink.com, we set up the company simply because we didn't believe that there was a platform out there that was extending best practice information to people like you, people that needed it, and people that needed best practice information in order to mature their own processes and improve their own standards of process and processing and move to process excellence. So we extend information to you through webinars such as this one and through conferences. And I'm delighted to say that we've got a conference this week, and Ariba is one of our key sponsors at that event. So if you're joining us at the European Summit on Finance, Shared Services and Outsourcing, you will be meeting the Ariba team there. So I will allow my presenters to introduce themselves in just a moment. And moving on, let's have a look at what the agenda looks like for the next 60 minutes. I'm going to touch briefly on how this session works and really what the intention of this session is. And then I'll be passing over to our experts who will really be getting into the real detail of this topic area. We'll then be closing in the last 10 minutes of the webinar to take your questions. And as always, we will be closing on the hour, because we know that time is very precious to you. So in terms of how this session works, it's a very straightforward platform GoToWebinar. Many of you have joined us before, so you'll be familiar with the platform. Any technical support, we do have technical support on the line for you should you have any technical queries. This area is a minefield for a lot of you, so just scratch your heads for a moment, write down the question that you really want to have answered today, and make sure that you do submit that question to me through your GoToWebinar panel. I'll then take all the questions, or as many as I can, and put them to our specialists in the last 10 minutes of the call. Please, something drove you to attend this webinar today. What was it? What is it that you're looking to have an answer to? Do ask that question, please. So now moving on, to have a look at what the intention of this session actually is. It's very obvious to most of you, but just so we're all absolutely on the same page. An invoice, as you all well know, is a legal document. It's a request for payment from suppliers to receive payment from you, and it is a legal document. A lot of invoices that we all receive have VAT on them, and we all need to be incredibly careful in the way that we treat VAT. In the past, we needed to be incredibly careful, but now we have to go that extra mile to be even more careful in our treatment of VAT. We're all experiences as people that work within finance functions that governments are becoming more and more paranoid about VAT. Christiaan will talk about the amount of income that comes into their hands through the collection of VAT, and this is really one of the key reasons why governments are so careful about how they gather VAT. So the treatment of paper and electronic invoices when it comes to VAT is needs to be done absolutely correctly. So with that in mind, e-invoicing is also very much on the rise. We're seeing that here at sharedserviceslink.com, that the groundswell of adoption is really beginning to pick up, and it's incredibly encouraging. About 30+ billion invoices are exchanged in Europe each year. A couple of years ago, only about 5% of those were pure electronic, and we're certainly feeling that that number is increasing as multinationals adopt technologies like Ariba to get rid of their paper invoices. So with these trends taking place, it's absolutely vital that you are confident that your e-invoicing provider is VAT compliant. And we all know this. but we want to be sure that the solution we go for ticks all the boxes without having to become a VAT expert. So how can we go about doing that? So now I'd like to introduce our first speaker for today, please, and that's James Tucker, Global Director of Collaborative Finance Management at Ariba. Over to you, please, James.
Well, thank you, Susie. And you're absolutely correct that efficient and compliant invoice and payment processing is the lifeblood of today's global commerce. And a recent Aberdeen research report shows that electronic invoice receipt and approval workflow, it's not only the #1 target solution for process improvement, but it's also top of mind for finance executives who are looking for solutions that help them improve cash flow and mitigate risk in their supply chain. Many companies, as you said, are already citing e-invoice program success, and I've heard stories that talk about over 70% cost takeout, or 40, 50, even 80,000 invoices per full-time equivalent, 98% touchless processing, and virtually 100% discount capture. Improved cash flow forecasting is another benefit companies have claimed. And I'll review a few more of these examples later on in the discussion. But what's interesting is even with the clear benefit, many organizations are still sitting on the sideline kind of waiting to better understand the implications e-invoicing has on their business in terms of the local regulatory, the compliance rules, Susie, that you talked about. And this is why we are very fortunate to have Christiaan van der Valk with us today to help navigate the latest thinking and present the business case for e-invoicing. Christiaan is the co-founder of TrustWeaver, a Sweden-based provider of compliance solutions servicing many of the world's corporations. Christiaan is closely involved with international and European legal, policy, and standards projects in the field of e-commerce security, contracting, privacy, and e-signatures. He's a core member of the CEN e-invoicing workshop and co-chairs the ICC EBIT Commission's Task Force on Security and Authentication. So a warm welcome to Christiaan van der Valk. Christiaan?
Thank you, James. I will go right into the agenda for my portion of this presentation. I'll just take you through the 4 high-level topics I will touch on. The first one is just some background on what we're talking about here, VAT, invoices. Susie mentioned a number of these things already, just to make sure we're on the same page. Then looking a little bit more closely at what compliance really means. A lot of people talk about it. Is it a single thing? Is it many different things? I'd like to analyze that a little bit further. I'll spend a little bit of time then on what evolving good practice looks like. I think there are many efforts that I will talk about where companies and tax administrations in different countries are trying to organize a better information platform for everyone. And then I'll look a little bit at the business case for e-invoicing from a compliance perspective. If we look at the background, the first thing I always like to show people when we discuss electronic invoices is the government position in all of this. It's actually a little risky to look at this only from your company's perspective, because of course in the end there is an external stakeholder there that you cannot ignore, call the public administration, your government, your country, or the countries that you trade in have a significant stake in your processes. And the reason for that is that many countries rely to a very large extent on value-added taxes or similar indirect taxes for their public revenue. The slide you're looking at shows the buildup of public revenue in OECD member states, basically the richest countries in the world. And the big circle that you see there around the gray pillar to the right essentially represents income from VAT. And you'll see that there that would be roughly about 1/3 of all public revenue. Some countries it's significantly more, and in some of them it's even more than 50% of public revenue. That's a lot of money. Now you would say, what does it have to do with invoices? Well, VAT is what experts call a self-assessment tax. The company, the taxable person, becomes a tax collector. It has responsibilities for maintaining proof of the reporting of taxes that goes on continually, for a very long period of time. And the invoice really plays an important role in all of that. So why the invoice? Right? Why not other types of B2B documentation? If you look at the kinds of things that tax auditors will be interested in, if they want to verify that you have correctly performed your transactions, correctly reported them, correctly paid or deducted tax for a period of time that is being reviewed, you will see to the left a number of things that they want to know, like who was involved, what was the nature of the supply, what was the price, was it actually paid, was the tax correctly calculated, etc. If you look at different types of documents involved in the B2B cycle, the invoice is really by far the most complete summary of the transaction. Right? Most of the other documents, if they are used at all, do not provide such an overview. So that's, of course, one of the main reasons that governments insist on regulating the invoice more than other types of documents or data involved in B2B, because it gives them such a nice overview. It intervenes at a good moment in the B2B transaction. And frankly, if you were to analyze world trade from small to large enterprises and any combination of those in between, you'll probably come to the conclusion that the invoice is also very often the only document that is exchanged. We talk about B2B like a very sophisticated thing, but in most cases, people might have a contract, and they probably will have an invoice. So that makes it a very important reason for governments to say that invoice must meet certain criteria, it must be reliable, it must be auditable. So then we can ask ourselves the question, electronic invoicing, how is that different from paper-based invoicing? Right? Is it really different? And of course, a lot of companies ask themselves the otherwise very legitimate question, why all of a sudden do I need to worry so much if I switch medium, if I produce or receive my invoices electronically rather than on paper? And isn't it so that electronic invoicing could be very much more reliable than paper invoicing? And that's, of course, true. If you look at the position of different players, you should really analyze this. Of course, tax administrations, when you talk to them, admit that it is both a threat and an opportunity to them. Depending on the country that you're in and the tax administration or the people you talk to, you'll get very interesting insights. One of them is, of course, that tax administrations do think electronic invoicing is a threat. They do think that electronic business is a threat in a certain way because electronic information simply is more easy to manipulate. Electronic information in and of itself, so if it isn't controlled in some fashion, can be copied many times, almost endlessly, without any loss of quality. It's easier to make changes without people detecting that necessarily. Bits and bytes are just more vulnerable than paper, which is in itself a low level, but still a certain level of integrity guarantee for data. Open networks like the internet, of course, don't help either. Certainly tax administrations have this picture of something that can easily be hacked, where people can easily get information, manipulate information, duplicate information, and therefore they see many risks. There is, of course, also an opportunity for tax administrations, and some tax administrations have clearly acted on this. They, just like companies, they see that there is a potential risk, but they also see that if you organize electronic business, electronic data flows correctly, there are many opportunities to make things better. And from the perspective of a tax administration, that means a better auditability of your business. This, by the way, is of course also in the interest of businesses. Right? So in an ideal world, an e-business transaction could actually be much more reliable, much more auditable than the paper system could ever be. Think of things like data mining or automated analysis of large databases, many other types of technologies that are out there, and tax administrations are, at this moment, very actively experimenting with. If you really look at why electronic invoicing is different, you also have to, of course, come to the conclusion that electronic flows are different for businesses as well. Just one case in point, there is a 25 billion or larger than 25 billion US dollar IT security market. There is no such thing for paper, right? And also businesses, of course, do treat electronic business differently for the very obvious reasons that I just mentioned. Right? There's a very last reason that is important from a business perspective, If you set up a paper-based system, like many companies have traditionally, of course, you can tweak things, right? Tweaking things is usually it usually involves the training of staff, certain manual procedures, other things that are relatively cost-effective to implement. Tweaking things in an information system is much more costly, much more risky, and much more something that companies want to avoid. So when companies decide to invest in electronic invoicing, usually, I think justifiably, they put themselves the objectives of having a very high degree of predictability that their invoices actually are correct and will be accepted by tax administrations. If we don't look at the next slide, we will come to the kinds of objectives that companies usually set themselves. So as I said, cost-effective legal certainty, being sure in advance that you are compliant in the jurisdictions that are touched by your invoices, not just where you are based, by the way, but where you trade. There are complex rules about jurisdiction applicable law when it comes to VAT and invoicing. Of course, companies also want to make sure that the switch to electronic invoicing doesn't mean all of a sudden that tax administrations will, every couple of weeks or so come around and turn their administration upside down. They want to be left alone. They want to have the minimum amount of information to be audited when tax administrations do ask questions. So they want a minimum audit surface. They want to make sure that there's quick and painless audits that the tax administration leaves with a happy smile on his face rather than bringing in colleagues and spending months in your offices. Companies also are interested in a unified approach, of course. They want to make sure that they don't have to implement different systems inside their information system, inside their B2B transactions for different countries. Right? And finally, of course, interoperability is very, very important for them as well. A lot of companies by now know that their trading partners will be using systems and standards and processes that aren't necessarily the same as theirs, and therefore there needs to be a way to interact with people who are already, who have already invested in their own systems. Freedom to change processes is, of course, also really critical. Companies do not want to invest in a system unless they know that it is fairly easy to evolve it, fairly cost-effective to meet requirements as they evolve, and it doesn't require them to change everything end-to-end every single time the country changes its mind on legislation. Now, the question that you hear very often is, okay, so but electronic invoicing, I hear about requirements, I hear about the law, where is it really legally permitted? And so here's the high-level summary. All OECD member states, which is quite a few countries, the richest countries in the world today, accept electronic invoicing, have explicit legislation about e-invoicing, with the exception of Japan. If we look at the G20, out of that group of countries, finance ministries, we look at 16 out of 20 countries that allow electronic invoicing. However, when you step outside those countries, you will find that almost no country accepts electronic invoicing. There is a slow development in some, right? But many of them simply haven't even got to the question yet. Also, within the countries, of course, that have explicit legislation, you will find a fairly significant difference in approach. There is no simple regulatory formula either. We see that difference in approach work out in different ways. If a country has to decide how to regulate electronic invoicing, there are different alternatives available to them, to the legislator. Two very obvious choices are, for instance, should I be very prescriptive, tell companies precisely what to do to comply, or should I be non-prescriptive and more functional? Should I tell them, here's the objective that you must meet, but I'm not going to tell you how to do it? That's one spectrum on which countries must place themselves. Another spectrum that's very, very important is that between whether a country should actually mandate the use of electronic invoices for business-to-business transactions, or make that fully optional. If we look at the chart that is on your screen here, it's very interesting to see that, for instance, Mexico and Brazil, which are relative newcomers in terms of e-invoicing legislation, especially compared to some European countries and a few others, have achieved really incredibly high levels of e-invoicing in a short period of time, by being both very prescriptive and having strong mandates. They say, here's how you do it, this is the date by which you must do it. And if you don't, you're in trouble. That provides a clear incentive, obviously, for businesses to actually go off and do it the right way by the right date. On the other end of the spectrum, you see a country like New Zealand, which has very high levels of e-invoicing as well. There, the situation is exactly the opposite. The requirements are completely non-prescriptive, they're very functional, and there is no mandate whatsoever for business-to-business invoices. But also New Zealand has achieved high degrees of electronic invoicing. Sadly, the European Union has positioned itself somewhat in between, somewhat on these scales rather than on an extreme. So electronic invoicing is mostly optional in the European Union. It's entirely optional for B2B. However, it's neither very prescriptive nor very functional. And as a result, I think we have seen in the European Union a lot of debate about whether or not to do electronic invoicing, what the risks are, and I think a lot of companies are still hesitating. If you look at the chart here in front of you, which is another spectrum, it's very interesting to look at how tax administrations experiment with different audit options. And I'll take you through them. One of the first one here is what we call the ex ante or partnership option. Some countries have started experimenting with an almost contractual approach between tax administration and especially larger businesses, so that companies would actually contractually commit to certain good practices. Australia and the Netherlands are a good example of that. And then we can look at some countries that have implemented real-time reporting and transaction pre-approval systems. Very, very interesting to see how that works. Some countries have implemented a system whereby before you can even issue the invoice, you must send it to the government in a completely seamless transaction, completely transparent. When you get it back, the invoice is good to go. And in the future, you might not even have to save it anymore because the audit, the approval has already happened instantaneously at that moment. However, most countries that allow electronic invoicing are still in the ex post category. They will audit you for an X number of years during which you must store the invoice. This is certainly still the case in the EU as well as in quite a few other countries. I will now try to spend a little bit of time analyzing what compliance is all about. I like this idea of a spectrum between very prescriptive rules and very functional rules, because you can put almost any type of legal requirement relating to e-invoicing on that spectrum. When people talk about compliance, very often you will find that they talk about the very high profile rules relating to auditability, particularly integrity and authenticity of invoices. That has created a lot of discussion. I'll spend a little bit more time talking about it myself as well. But it's not the only type of requirements. There are many more. I'll take you through them. There can be mandatory agreements between or among trading partners or service providers involved, right, where the law says you must have an agreement and it must say the following things, or it must deal with the following things in order to be compliant. You may need to get prior approval, or you may need to notify your tax administration before you start electronic invoicing. There may be various types of requirements related to the outsourcing of tax-relevant functions. So give a part of your process to a third party, or give a part of your archive to a third party. What is it that you would need to do in order to continue to comply? And of course, there are also requirements specifically about how you archive. There are requirements about cross-border processing, including whether you can give your electronic invoicing process to an operator that is not based in your country, for instance. Same thing for archiving. Where can you archive? Can you archive in a foreign country? Can you give your archiving to a foreign entity? There may be rules about that. There are rules about the form and format of invoices. In some cases, there is a mandatory audit format, for instance, to which you must be able to convert your invoices. And finally, there are the better known requirements about the content of invoices. We're now going to do a poll question. I will turn this over to Susie.
Thank you very much indeed, Christiaan. So let's get an idea as to what the landscape is in terms of purchase invoices received each year within your shared services organization. So if you can tick the box which is most relevant to your own situation, how many purchase invoices, this is paper and electronic please, do you receive per annum? Less than 100,000, 100,000 to 200,000, 200 to 500,000, 500,000 to 1 million, or are you processing over 1 million invoices per annum? Now, we're doing two back-to-back. polls here, so if I can ask you, if you haven't responded, please do so now. We've only got 45% of the votes back, so we will be waiting for you to respond. Just to remind you of the question, how many purchase invoices do you process each year? Less than 100,000, 100 to 200,000, 200,000 to 500,000, 500,000 to 1 million, or do you process over 1 million invoices per annum? 63% in. And just a reminder, if you haven't ticked the button most appropriate to your situation, please do so. We like to get at least 70% of the votes back, please. And closing the poll in 3, 2, 1. We've actually got 74% of you showing your information, sharing your information with us on this webinar, which is very encouraging. So let's see, the results will be coming up shortly. 42% of you process less than 100,000. That's interesting. Normally it looks more like a bell curve, actually. So that's quite a high number for what we would generally consider for shared services a relatively low volume. And let's have a look. For 500,000 or plus, we've got about 28% of you responding to that. Good. Let's move straight on to our next poll, and you will be seeing this very shortly. And it'll be interesting to see what the data is like, especially for those that process 100,000 or less invoices each year. So the question here is, how many countries does this volume represent? Is it just one country? Do you really process invoices that are just for your own country, domestic invoices? 2 to 5 countries, 6 to 10 countries, 11 to 15 countries, 11 to 20 countries, or 21 countries or more. So one country, so just processing invoices for a single jurisdiction. There will obviously be a whole mixture of cross-border and domestic invoices in there. 2 to 5 countries, 6 to 10, 11 to 20, or 21 or more. Interesting results coming back. If you haven't already ticked the button, please do so, closing the poll in 3, 2, 1. Let's have a look at those results. Interesting feedback, as you can see here. 24% of you process invoices for one country. And then at the other end of the scale, we've got 31% of you processing invoices for 21 or more countries. So I'm guessing that they're going to be for regional or global shared services organizations. Very interesting indeed. And back to you, Christiaan.
Thank you, Susie. I'm going to continue with a little bit more of a deep dive into what auditability really means. Auditability is a key aspect of compliance. So in the end, of course, what the tax administration wants to know is that he can trust your accounts, that he can trust your reporting, that basically the transactions that you've reported to them are correct, complete, and that the invoices that you have stored represent those correct transactions correctly. So why would an auditor trust your accounts? There are a couple of ways in which this might happen. And of course, in the end, what an auditor needs to do is look at external data, look at things that you have stored, that you have kept during the archiving period, and try to come to the conclusion that you have, in fact, done a proper job accounting for those transactions. So if we look at the ex post type of audit system, which is the one that is still active in most countries that allow electronic invoicing, there's really a couple of ways in which this can happen. If you look at the document, electronic or paper, of course, an auditor might use what is called intrinsic evidence. It is evidence that shows from the actual object that he is looking at. So in the case of paper, it might be because the paper is yellow, it has a particular type of letterhead, and it has punch holes in it. Therefore, there are some indications that show that this was indeed a paper that was stored at that moment in time, etc., etc. So it's the individual object. But of course, there might also be other types of pointers, other types of evidence. One of them is historical context data. There might be data that comes from the actual transaction when you performed it, and therefore, if you store that and it is reasonably comprehensive, that might add to your evidence as well. Finally, there are two others: internal coherence of complex data. So if you have a database, for instance, of invoices or even your accounting data, of course, if it is internally coherent, then you can show certain trends, and those trends are not broken at a certain moment in time, that can be a pointer as well that can add to your evidence, and that it will probably be very hard to create that kind of result for a large amount of data fraudulently. Finally, of course, you can also present third-party audit reports, historical reports from the time that is being audited, that you actually had a proper process in place and the third party has issued a report saying that you did according to certain objective parameters. We're going to look at different ways in which this happens. Now, at this slide, I need to explain a little bit what happens. Usually, a single taxable person, so a company, might be audited. On the left-hand side of this arrow you see here, you see the taxable person number one is really, of course, the subject, the immediate thing that the tax administration is interested in. But it might be so that if that particular taxable person does not have enough evidence of its transactions, that also its trading partners or a particular trading partner of that taxable person gets a visit or gets certain questions. We are going to move into this arrow looking a little bit at different ways here. I mean, if you look at the good old paper days, of course, you will see that if we look at the invoices are very strong evidence, or can be very strong evidence, because at the time before, printers and high-volume copiers and many other types of electronic equipment that make paper nowadays so indistinguishable, invoices were a whole lot more distinguishable. They were a whole lot more auditable in and of themselves. So very often the paper invoice was quite recognizable because of its intrinsic features, and therefore that was a very strong indication for the auditor that the invoice was correct, and therefore transactions probably were as well. That is not to say, of course, that the auditor wouldn't ask more questions, but we certainly would have a very high comfort level right there looking at these good old paper invoices. We then turn to the modern paper world, of course. This is really a lose-lose situation for both businesses and tax administrations. The invoice message, the stored paper that companies can present in an audit really doesn't carry any or much evidence weight. So what ends up happening is, of course, that tax administrations have to do deeper audits, more intrusive audits. The invoice in and of itself doesn't contribute all that much. So there are other things that auditors increasingly look at, and I think from the experience of most of the people on this call, we can probably get quite a few interesting stories, let's put it that way, as to how some of those intrusive audits might work. So the use of modern paper technologies isn't always a blessing. It can actually turn out to be quite the opposite from an audit perspective. We then go to electronic invoices. There are different ways, different techniques in which you can improve the auditability of your invoices. And I'm going to take you through the three main options. The first one is known in most countries as either a legal option or something that you must do. It's actually usually just an option, but there are still a couple of countries where it's the only choice available. If you sign an invoice, and I would say if you sign it correctly, you kind of go back to the old paper-based situation where the invoice object is recognizable, is verifiable, and therefore provides a very high level of comfort to an auditor. A couple of words about the electronic signature. I know there's a lot of discussions about electronic signatures. It's not necessarily a very well-known animal in the business world. And one thing that a lot of people don't realize is that it's not only sometimes a burden, sometimes something that you add to your process, but there are also clear benefits associated with it. The first one is that in many countries, electronic signature legislation allows you to do something that lawyers call a reversal of the burden of proof. It actually allows you to be in a position of 100% certainty whereby legally, if a tax administration wants to deny those invoices, they would have to prove that the authenticity and integrity are not correct, which is quite a drastic change from a traditional tax situation where, as a company, you're almost always the person who has to provide that evidence. With the right level of electronic signature in many countries, you can actually lean back and say, okay, if you have a problem with these invoices regardless, you will have to prove that they are not correct. Another thing about electronic signatures is that they are accepted in that very same way in all countries that accept electronic invoices. So electronic invoicing, if it is explicitly permitted by law, it will also be possible to protect those and to provide a high level of auditability using electronic signatures. There is no country that would say, we will not recognize this. Right? And of course, finally, it is a very targeted, specific trust technology that benefits from a high degree of interoperability, much more so than, of course, individual business processes or other types of technologies you might use. However, there are, of course, also other technologies, and I will take you through two well-known methods. The first one is what is in Europe named the EDI method. Now, I should say immediately it's really as a specific category only available in Europe. Right? There are no other countries that would have a specific legislative category called EDI that can guarantee compliance. But when you use EDI, basically you shift the evidence from the invoice object to the historical transaction information, to the exchange information of that object. So you're going to prove through various types of data, like for instance your interchange agreement from that time, but also evidence that you have from conversion and security processes that were involved in that one-to-one exchange, that at that moment in time your invoicing process was so well controlled between the two trading partners using this particular type of automation between the trading partners that the risk of your invoices not having been correctly protected is very, very low. Finally, a method that is becoming available now in most European countries is what you might call the business controls or business internal controls method. It's a different way of looking at things. It's essentially saying, rather than proving the integrity and authenticity of my invoice, which is really just one piece of the transaction, I'm going to prove the legitimacy of my supply, of the actual supply, through a whole chain of internal control pieces of evidence that I have collected. I can prove to a tax administration during the entire storage period that the way in which I have organized my controls around invoices, around B2B processes, is so tight and so well organized that basically the chance of problems with integrity and authenticity is very, very low. Right? This is a method that is known in some other countries. For instance, if you look at Australia, New Zealand, the UK, also Northern Europe and Canada, it's a method that is already practiced. We will need to see how it gets transposed into the national laws of European member states at this moment in time, but it is developing as a third way, in a sense, in Europe, way of evidencing invoices. I'm going to quickly move over to the subject of good practice. As you can tell from my previous discussion, it isn't always that easy to perform electronic invoicing. Of course, you can ask yourself the question why, and I think if you analyze that, one of the key conclusions you will come to is that tax administrations and businesses don't understand each other very well. So if you ask an informed business person, can you describe a good e-invoicing process for me, you'll see something like that. And if you ask a tax administration, you will see something like the following. Unfortunately, the definition of these two groups of people of what a good e-invoicing process looks like is different, right? And if you look at them, if you compare them, you have to ask yourself the question, how can I know what goes on in the minds of tax administration so I can actually know what is an acceptable way of performing electronic invoicing? We have taken this analysis as a basis within the European standardization groups to basically get both tax administrations and businesses around the table and work out a common concept of what a good practice is. And that exists today in the form of a set of standards that were issued called the CEN e-invoicing compliance guidelines. They were issued in 2009 for the first time, and they're about to be updated this year. If we quickly move on to what that is based on, it is based on a very detailed analysis of an e-invoicing transaction, chopped up into sub-processes, and then describe what, from a tax and business perspective, the risks might be in those processes and how they can be mitigated. It's a very interesting piece of work. For those who are interested in compliance more deeply, I would recommend you have a look at it. I will quickly now turn to the business case. The business case, as I announced earlier, I'm going to look at it more from a compliance perspective than from a detailed business perspective. What is the compliance angle, the compliance dimension of your business case? I'm going to take some numbers here that come from the Politecnico di Milano, the university in Milano, who's done some very detailed research and basically come up with savings on the basis of 3 types of categories of e-invoicing. The first one isn't actually really e-invoicing, it's just scanning and electronically storing your paper invoices. You can save some money with that, it's not huge. The next one is proper electronic invoicing but without a high degree of automation. And the third one is a fully automated B2B cycle. You will see that savings, of course, are very large in the last category, but already more than respectable in the middle category of just VAT-compliant e-invoicing. Now, unfortunately, if you set that out against the actual average risk, and I have to confess that's a very difficult concept to quantify because the risk can be, or very often is, related to the value of invoices. But if you take an average value of invoices at around 2,500 euros or so, which is probably on the low side in the B2B world, you will come to risks that average around 400 euros per invoice if you get it wrong. And of course, the risk can be quite a bit higher in particular circumstances. So the problem with all of that is, of course, that the benefits, the savings, can be dwarfed by the risk if you don't pay attention. The good news is, and I really want to stress this, the good news is that the market has developed such good risk mitigation methods. People like Ariba, companies like Ariba that have really invested in trying to make the process really work well, both for the business partners but also provide very high degrees of auditability for them, do this at a cost that is almost negligible compared to the savings. And it provides you with a much higher level of auditability than you can ever get from a paper process. Now we're going to have another poll, and I will turn to Susie, please.
Thank you very much indeed, Christiaan. So let's have a look at to what extent you have qualified the tax compliance risk for your own e-invoicing project. So please do give us a feedback on how much you have actually qualified the tax compliant risk for your own e-invoicing project. Perhaps you haven't at all, either because you haven't started your project as yet, or you've just started evaluating the market, or maybe you're quite far in but you just haven't really got your teeth into this aspect as yet. A little but not enough, to a reasonable degree, to a thorough degree, or do you think you have actually looked into it as thoroughly as you can? 54% of you have responded. Please, if you haven't ticked the box, please do so. It's very interesting for you to have market research, to benchmark against your peers, and to see how you do you fare against them. So 64% have voted. Waiting for a few more. We will be closing the poll in 3, 2, 1. Okay, let's have a look at the results. So interestingly, 32% of you haven't actually got your teeth into this part of the evaluation as yet. And if we just work through there, you can see at the far end, 17% of you really think you have gone as far as you can as far as you're looking at the compliance, the tax compliant risk for your e-invoicing project. Thank you very much indeed. And back to you, Christiaan.
Thank you, Susie. That takes me nicely into the conclusion slide that I still have here. It shows that quite a few people are yet to embark on an evaluation of their risks. I just want to highlight a couple of conclusion points. Compliance isn't a single thing. There are many facets, many aspects of it that must be managed. Change management is an important aspect of it. Don't think that you're going to put something in place and not look at it for the next 2 decades. You need to keep looking at it because things do change. Countries have different approaches, and we've seen that. It's important to know that challenges can be overcome if you study existing good practice a little bit. It's not perfect, but it will certainly provide you with a better sense of what a base foundation of good practice for compliance can look like. Risk-free global invoicing is not an abstract thing of the future. It's very important to highlight that many market players have invested and have actually been able to provide to the market solutions that are pretty much risk-free. In any case, as I said earlier, much more so than any paper-based system you've ever worked with. They're extremely cost-effective and they're future-proof. They build in change management in order to make sure that trading partners do not have to worry about those aspects too much. Right? It's actually used successfully by thousands of companies already. The problem with some of these discussions is because they're legal, it's about compliance, it's very problem-focused. And I think if people spend more time analyzing the success stories on this market, for instance, the many Ariba customers that successfully deployed these kinds of solutions, if they spend time going out sharing their successes with people, I think the perception from the market would be different. There really are fantastic solutions out there, and tax administrations love them. I have been in many meetings with companies that have implemented good solutions, really thought through what it is they wanted. They didn't overdo it, they didn't underdo it, and they got applause in certain cases from tax administrations as they presented it to. Finally, I think it's a fair conclusion that no company can afford to ignore the extraordinary benefits of e-invoicing. It's possible. You can actually make huge savings and contain the risk at the same time. So there is an opportunity out there. And I'm going to now close and turn it over to James Tucker from Ariba.
Well, thanks, Christian. And in the few minutes remaining, I just wanted to give you a quick overview for those of you that aren't familiar with Ariba before we get into some question and answer time. Ariba is a provider of business-to-business solutions over the world's largest commerce network, and we have expertise in the resources and services that you need for buying, selling, and managing cash. We were recently recognized as a leader in a PayStream Advisor's Payables Automation Report for workflow and discount capture. And it was also, we were placed as a leader in Forrester's Wave Report, and were recently recognized as the Leaders in Innovation Award for the best web-based financial supply chain solution. Our collaborative business commerce solutions help companies improve the financial flows between the buying and the selling functions, essentially across procure-to-pay, the procure-to-pay and the source-to-settle function from a buyer and a seller perspective. The collaborative nature of our solutions means that we help automate these processes that occur between trading partners, not just within the four walls of your company. And we do this by allowing you to leverage the Ariba network to help you sort of extend your back office, your existing ERP systems, and likewise for your sellers. And that helps you find each other, helps you maintain contact information, exchange these business documents, things like catalogs, purchase orders, invoices, and payments, payment remittance detail. At the heart of Ariba Commerce Cloud is the world's largest trading community, what we call the Ariba Network. And the Ariba Network helps companies become a networked enterprise. McKinsey talks about the networked enterprises as one that is 50% more likely to be a market leader, to gain market share, and to achieve higher margins and increase sales. And we do this technically through a single connection to your back office systems. And that securely connects you to this network of global suppliers. Our network is currently in use in over 130 countries. We process over 70 currencies, and we have about 350,000 registered suppliers in our network. Our recent addition of Quadrum to the Ariba family adds an additional 70,000 suppliers to what was already the largest global commerce network of its kind. We're also, as far as I understand, the only e-invoice network to offer unlimited supplier enablement. We have the largest team of professionals that are dedicated to targeting suppliers and onboarding them on your behalf. And we also offer a broad set of on-demand solutions that expands this connectivity and allows you to automate capabilities across the procure-to-pay function. These include things like punch-out catalogs, purchase order delivery, our trademarked PO flip functionality, invoice scanning and workflow, discount professional, and several other solutions that can take connectivity beyond simple automation. So when we opened up, Susie talked about the importance of ticking the boxes for compliance. And so I just want to spend a couple seconds here to give you an overview of how Ariba helps you tick the boxes when it comes to e-invoicing compliance. There are really 4 primary areas that you heard Christiaan speak about. And that is being able to provide an authenticated digital signature. And it's with our partnership with Christiaan and his company, TrustWeaver, that we can do this and we can keep up to speed with the changes in that technology. VAT field validation is something that we can do particularly well for a couple of reasons. One, because we have that line-level detail of purchase orders and invoices in the network. And with our partnership with KPMG, they provide and maintain this country-by-country specific guidelines for tax-compliant electronic invoicing. We're able to incorporate that into our software solution and, again, keep it up to date to make it easier for you. And then e-archival. We package up the human-readable electronic invoice form into a package that you can download for archival. We also provide a complete e-archival solution if you need help with that as well. I mentioned earlier that I'd share a couple stories of customer success, and there are a few listed here. These are just examples of customers that are using Ariba's e-invoicing solution in a global capacity. Just for the sake of time, I'll sort of focus on the one in the middle with AstraZeneca. Many of you have heard of AstraZeneca. They're a global pharmaceutical. They're headquartered in London. I love this story because it's an example of a very large company that had a paper invoice problem. They found that they were actually paying many of their invoices upon receipt, and with Ariba's electronic invoicing solution in place, they were able to get control over that. They were able to comply with the and provide a compliance solution as well for their trading partners in Europe. But what was an interesting benefit and part of the business case for them was not just getting rid of paper, not just the compliance aspect of it, but they were actually able to gain visibility and control over their electronic invoice process and improved working capital by essentially adhering to the terms that they had agreed upon with their supplier. We've done webinars with all of these customers, and we have a webinar series that you can hear from companies like these, and that webinar series covers topics including across the payables automation spectrum, scanning, workflow, discount capture, supply chain finance, performance measurement, things like that. So you can register for this best practice series at ariba.com/programs/invoice-now. In April, we're going to feature Sam Knox from CFO Magazine, who's going to reveal some research that he has done as their research director, surveying CFOs, global CFOs, to find out what their strategic initiatives are, ways in which they're leveraging solutions like e-invoicing to not only drive out costs, but also to optimize working capital. I also hope to meet many of you at Ariba Live in London, May 24th through 26th. And as Susie mentioned, stop by her conference this week in London at the Ariba booth and say hello to some of the folks from Ariba and ask them some questions about how we're able to help with your particular business. And with that, I'll pass it back to Susie so we can get to your questions and your thoughts.
Excellent. Thank you very much indeed, James. That was very interesting to both James and Christiaan. We've got a lot of questions, quite technical, as you can probably imagine. Do keep your questions coming through. We do have a few minutes for questions before we close. So question number one, question which made me laugh a little bit. I'm not entirely sure who submitted it, but it goes along the lines of, to quote you, Christiaan, if I may, tax administrations love it. This particular viewer thinks that's a little bit of a bold statement. I'd be interested to see what you think about that. Their comment is Greece, Czech Republic, Hungary are poles apart from, say, the Netherlands, and they just wanted to see if you had any specific comments regarding that. They were saying that the 2013 EU VAT directive may help these jurisdictions Any comments regarding this? That's to Christiaan, please.
Yeah, I mean, of course, we know that different member states have different mentalities. And I mean, frankly, I don't think a single directive or 1,000 directives coming from Brussels will change local tax cultures. Sometimes, of course, the European Commission or European institutions can help a little bit. And there are countries where, of course, we all know that formalities are important in the tax audit process. And I think many of us have learned that it's probably a good idea to then pay attention to them as well. Yeah, unfortunately, of course, very, very difficult tax administrations are an expensive exercise for companies that trade in such countries. However, I have to say, tax administrations love it. The solutions that I've seen presented to them were not just in the Nordics or in countries that have a more liberal attitude, but also in countries like Spain and Italy and indeed Greece. So it's possible. It's entirely possible.
Yeah, excellent. Yeah, good. Thank you very much for that. I hope that was useful to that particular viewer. Also, a question, I think this may be directed more towards James, specifically regarding the actual kind of the functionality of the Ariba solution. How does the VAT field validation work? From a high level, could you just give us an overview on that functionality?
Well, on a country-by-country basis, as I said, we have we partner with KPMG, and they provide us the requirements for compliance for the senders, the supplier when they send the invoice to the country of origin, as well as for the buyer or the recipient of that invoice. And these cover the electronic signature, the authentication of that signature, and then the VAT field level requirements, which I think is this question. It's applying the proper tax codes and tax amounts and making sure that the invoice then represents that. We have experts in this particular area, and I'd be happy to do a follow-up in more detail. I'm probably not going to do it justice, but I think as you look at what's required on a country-by-country basis, there are different tax requirements as you pass that value-add tax along the supply chain. And what we do is we ensure that the invoice reflects those local tax laws. I hope that helps. Maybe Christiaan can add a little color to that, but again, I'd be happy to take that one offline and dig a little deeper into what they're looking for.
Thank you very much. Actually, I think we didn't have time to go any deeper. I would like to just ask 2 more questions, please, if I may. Could you, James, we've got an organisation that's representing more of a services-based buy-side organisation. They're just pointing out, could you just refer to any kind of service-based organisations that you are currently really working with and that are using Ariba very much for their electronic invoicing?
Well, I would think Accenture would probably be a great example, and services represents a very large percent of our transaction volume that goes through the Ariba network. Accenture being a good example, where essentially sometimes you'll have a blanket purchase order. You have complex services, and you have to be able to invoice against those services. There's a sort of a time and materials component to it that just tracks back to a purchase order. There are success stories, and perhaps that's a webinar we should do, because I find complex services and services in general to be growing and emerging interest in this particular area. But I think we have probably 16 to 20% of the spend flowing through our network is represented by business services in general. So it's a very large category. We process over $160 billion annually in spend, so you can imagine the size that what we're talking about here.
Okay, excellent.
What we could probably do is line up someone like Accenture or one of our other large customers in this area to put some more detail around that.
Good. So regardless of what kind of industry you are in, do make sure that Ariba is very much on your list of people that you must meet with if you're looking at electronic invoicing. We are running out of time. I just do want to ask one final question, please, and it's absolutely going to benefit you, so make sure you do respond, please. In the coming months, Ariba is sponsoring 2 of Shared Services Link.com conferences, the Toning Up Purchase to Pay to Attain Touchless Processing. That's about the fifth time we've run this, and that's taking place in June in London. We also have e-invoicing Europe. Do tick on which one you would like to be entered for, and you will be naturally entered into a raffle, and Ariba will be drawing a couple of names out and we will be sharing the names with you, and those individuals will be winning tickets to either Toning Up Purchase to Pay to Attain Touchless Processing, or e-invoicing Europe. So do decide which one you would like to come to. Ariba is lead sponsor at e-invoicing Europe in July, and obviously we're really looking forward to them coming along to both those. I'm going to be closing the poll, so if you haven't responded, please do so. I urge you to take advantage of that. The tickets are worth about £1,500 at a minimum, and about £2,500 for the premium tickets. I'm closing the poll in 3, 2, 1. Okay, good. Gentlemen, thank you very much indeed for your input today. That was invaluable, and I look forward to you all joining us next time at sharedservicelink.com for the Delhaize story at the end of the month. I would also like to add that Ariba have shown you there a list of very striking, strong clients that are using Ariba very successfully within their organizations. Caterpillar did a presentation for us last year. They agreed to come back, which we're delighted about, in I think it's May, to do a follow-up story. So they will be showing you how they have moved on with the Ariba solution and what they're doing now, so you can chart their success with them. So do make sure you make time for that. Thank you very much to Christiaan and also to James for a fantastic hour spent talking about VAT and electronic invoicing. I do look forward to welcoming you next time. Thank you very much, and goodbye.